Hi, Bill here with another edition of the Metals Minute. Today is Wednesday, October 27th, 2021. Well, it's been another interesting week in the metals. We have gold continuing to lead the way, up 0.5% this past week. The rest of the metals are down just a little bit. The details are in the write-up. But we have the inflation story continues to build. We haven't seen the end of that yet. We're now hearing from those in the agricultural sector that fertilizer, herbicide, and feed, all the input costs in the field of agriculture have gone way up. And so some of the food inflation that we've been hearing about, food prices, and then shrinkflation, where the packaging is smaller but the prices are the same, that's not over. That all hasn't filtered through yet. So when the next round of, could be in the next 2 or 3 months, we may see some of the increases that farmers have experienced with input costs may filter out to food costs again. And so that's raging. We also see the stagflation story, and I'll show you this graph that came out today, this news. The GDP, the gross domestic product growth, was projected as recently as late August to be 6.2% for this quarter. Well, they're revising that down to 0.2%. And by the time the final number is calculated, it very well could be negative. So we have negative growth plus increasing prices. That's the definition of stagflation. So that's typically, we're not happy about the circumstances out there in the real world because we live in it as well. But we are happy about what it historically means for gold and silver. The last period of stagflation, as we've mentioned before, it caused both gold and silver to do well. In fact, in the years after that, within 5 years, gold had increased 8 times. So even if it just did half as well, that would still be a phenomenal result for those of us that believe in and own precious metals. So we're just at the beginning. This train is just beginning to leave the station, so there's plenty of time to get on board. Another thing that we have going on is a new tax plan that may help gold and silver, and here's why. It's called the Billionaire Tax, and it's a new tax on unrealized gains. In other words, people don't have to sell in order to be taxed. And the reason that may benefit gold and silver is this billionaire tax affects people that earn as little as 50 million. They may not have $1 billion, but they'll be affected by this billionaire tax. And the reason it will benefit gold and silver, possibly, is because the assets they're looking at are traded on an exchange or that type of thing. Those are the assets they're looking the most closely at. Physical gold and silver are not in that category. So gold ETFs, silver ETFs, gold futures contracts, precious metals futures, all those things are countable. Those are the types of things they're looking at and plan to tax, even if they don't sell. Physical gold and silver, however, are not in that category. So we could see a lot of new interested, wealthy investors that are suddenly interested in physical precious metals, and that's good for all of us. And really, that will just get us back to the historic levels of physical precious metals ownership. Right now, it's around 0.5%. Historically, it's at around 2 to 3%. So that's an increase in demand that I believe this new tax law could help usher into place and get us back to those historical averages. Thanks for tuning in. We'll see you next week.